Hi, I'm Lawrence Parker Brown. Welcome to the Inside Network. Welcome to this INDepth. We're exploring hybrid solutions and how they can transform businesses. I'm delighted to be joined by Managing Director and Head of Hybrid Solutions at Alceon, and that's Daniel Chersky.
Good to be with you.
Daniel, thanks for your time. So it's a new term to some advisors, some consultants. Can you capture what it is that hybrid solutions represents?
Yeah, at Alceon, hybrid solution refers to delivering tailored capital that responds to the needs of the specific business or business owner that we're dealing with. So, one size does not fit all, especially in business. So we invest up and down the capital structure, from senior debt to ordinary equity, but often we sit somewhere in between, which is where the term hybrid comes in.
So Daniel, why does this part of the market exist, particularly in the mid-market? What can it help businesses achieve?
Yeah, the market for hybrid solutions exists because no two situations are the same, and the situation of the business and the objectives of its founders or owners can vary greatly. But often they're just presented with the same cookie-cutter options, such as bank debt or ordinary equity. And particularly in the mid-market, there's very few hybrid capital providers to give them those other options.
Can you walk me through where this sits in the capital structure? Presumably it's different to a traditional loan, a little bit different also to private equity in terms of that, there's a division at Alceon that just thinks about equity stakes.
The strategy is deliberately very flexible, so it allows us to play up and down the capital structure. And often we sit in that hybrid space between debt and equity. So it allows us to combine the best parts of credit, being the downside protection, but also participate in the upside that equity does as well. So specifically compared to traditional private credit, we can be more flexible, potentially sit more junior in the capital structure, which allows us to generate higher returns. Compared to private equity, we're typically in a lower risk position, have higher income and higher security features. And also typically we will not be looking to take control positions in businesses as private equity typically do.
So Daniel, you're targeting 12 to 15% returns. Can you explain how you get there and what the drivers of those returns are?
Yeah, we're targeting 12 to 15% net returns, and that's generated by the underlying portfolio of investments, which is relatively evenly split across three buckets. So firstly, senior debt, which is the lowest risk. Then we've got hybrid capital, and then a third bucket being equity special situations, which will typically only be 20% of the portfolio, which has the highest upside, but also potentially the largest variability and outcomes. So we think the combination of that, the blend, and the fact that 70 to 80% of the portfolio is underpinned by credit, either senior or hybrid, generates a really unique and attractive risk-adjusted return.
How do deals come to you? What does your sourcing look like? And ultimately, why would founders want to work with you and the team at Alceon against other options?
Great question. In terms of sourcing, typically three buckets, direct or proprietary sourcing based on the decades-long relationships of the Alceon partners and our senior deal makers results in a lot of repeat business where borrowers and business owners come back to us. There's also a very powerful network around the Alceon business. We've got hundreds of high net worth investors, industry experts and advisors that deal direct with us. And then thirdly, we have long-standing and trusted relationships with corporate advisors, investment banks, and other intermediaries around town. In terms of why people deal with us, we're not always the cheapest capital, but counterparties and partners deal with us because we deliver a partnership approach, flexibility of capital and speed of decision making, and then reliability and integrity. So we do what we say.
When you're structuring a deal, how do you strike the right balance? Presumably you're trying to solve for the investee, the company, but also the investor. What does it look like?
Yeah, starting with the investor side, risk management is at the forefront of what we do. So we make sure we deeply understand the risk that we're exposing our capital to, and taking steps to mitigate that as best we can by deal structuring and other features of our investment. But not all risks can be mitigated in an investment. So we need to also make sure that we're getting an appropriate return for the risk that we're taking. Put another way, that we're investing with an attractive risk-adjusted return. On the investee side, we like to start with a whiteboard approach to really understand what the partner and the business is looking to achieve and how our capital can help them achieve that. So each situation is different. Sometimes we're a lender, sometimes we're an equity partner.
So Daniel, how do you think about the downside? What does risk management look like to make sure you're protecting capital?
For us, risk management is first and foremost, and we think about it in a multifaceted way. At a really high level, alignment is super important. So regardless of the deal structure, we need to make sure that we're aligned with the people we're partnering with. In our experience, success or lack thereof is often due to the people you're in business with and not having that proper alignment. Secondly, thorough due diligence and thoughtful deal structuring is essential. That's a non-negotiable for us. And the partnership approach that I keep coming back to, making sure we're close enough to the deal to spot any issues early so that we can work through that with our partner collaboratively and come up with a solution.
What does Alceon do that's different from, there are other managers in this space, whether they're hybrid or special situations. It's not just a process, presumably, it's also just in practice how you function.
Yeah, so I think how we differentiate ourselves in the market, particularly with hybrid solutions, is being, having a really truly flexible capital. So we're not trying to stick, round pegs into square holes. Creativity and structuring expertise, not just bringing capital, but also a solution to the table. Speed of decision making, is a source of advantage for us, which comes from being 100% domestic and employee-owned business. And finally, that partnership approach and making sure we're fully aligned.
So Daniel, you've been at Alceon since the beginning. What have you learned across that time and what works?
Yeah, so being part of the founding team 15 years ago, obviously over that time, my role and my team has evolved. But we've always focused on those atypical or non-standard deal constructs, special situations, if you will, and that's still what we focus on. I guess the learning over that time is, the value in having, a group of people with different perspectives and different skill sets around the table really helps. So, our team has, really diverse and complementary expertise. We've got people with corporate credit experience, special situations, listed equities. And so I think that gives us a differentiated and more complete lens with which to assess risk and return and being able to structure deals appropriately. And we're also leaning heavily into AI these days to leverage the capacity of the team and help us make better decisions.
So Daniel, can you tell us about the fund, in particular the Partners Fund? It's described as Alceon's best ideas. What does that mean for an investor in practice? And what are they going to get access to through the fund?
Yeah, so the Partners Fund is a first for our business in so much as it has co-investment rights across all of Alceon deal flow. It will be the primary investment vehicle for all hybrid solutions deal flow, as well as co-invest across all our other strategies, such as real estate. It'll also have 50-50 co-investment rights alongside any investments done by the Alceon balance sheet, which is quite a unique feature. The fund's portfolio will be constructed in line with its defensive growth mandate, which at a high level essentially means a relatively even split between senior credit, hybrid capital, and equity special situations. In terms of alignment, importantly, the alignment with investors in the Partners Fund is extremely strong. So we are a 100% staff-owned business, and we're investing $40 million of our own money alongside investors on exactly the same terms and conditions, which really speaks to our high conviction in this product.
So Daniel, who's this fund for? What sort of investor profile does it resonate with, and what role do you see it playing in the portfolio?
Yeah, so the fund aims to deliver investors that defensive growth profile. So to unpack that a little bit, the defensive bit comes from the fact that 70 to 80% of the portfolio will be underpinned by credit and the income and contractual protections that affords. The growth bit comes from the hybrid and equity linked part of the portfolio, which gives exposure to that equity upside. So the fund is really designed to sit alongside investors' existing exposure to private equity and private credit, so offering more income and downside protection compared to private equity, but higher returns than traditional senior-only credit.
What does the pipeline look like right now, and where are you seeing the most compelling opportunities?
Our three main verticals are mid-market companies, asset owners, and specialty lenders. So the opportunity set is pretty strong across the board. In our world, no two deals are the same, and the flexibility of our capital means we've got lots of shots at goal. So we're looking at high growth companies that need expansion capital, asset rich companies that might need a hybrid capital solution, or innovative, specialty lenders that need their first warehouse to originate loans.
So Daniel, we've learned a tremendous amount about your work at Alceon. For the advisors, their clients, researchers that are watching this, ultimately any investor, would you like to leave a final thought? What would it be?
Yeah, I guess our view is capital is the ultimate commodity, and mainstream investment strategies that are undifferentiated, their returns will trend towards the benchmark, particularly in an AI world. So, to deliver, superior or excess returns to investors, you really need to be doing something different and offering something different to your clients and your investment partners. And that's really what Alceon Hybrid Solutions and the Alceon Partners Fund is designed to do. And we're backing that strategy with a $40 million co-investment as partners of the business.
Look, I think it's really, really interesting, and I'd love to keep learning more. So I hope we can speak again soon. Thank you, Daniel.
Great to be with you. Cheers.